Thank you. Mr. Chairman, members of the Board of NIFA, I'm calling to order a meeting of the Audit and Internal Controls Committee of the Nassau Interim Finance Authority. It is 5:06 p.m. on May 31st, 2022. We have a number of items on our agenda, the first of which is to approve the minutes of the last meeting. Before I do that, I'll point out that all members of the Audit Committee are present, as well as other members of the NIFA Board who are welcome to ask questions during the committee meeting. For the public, that may mean that having received all the information in advance, both board members and audit committee members may have less to say, if anything, about this in the full board meeting where we consider the same items a second time. So that's just an administrative item. With that, I would ask a member of the committee, either Mr. Petracca, Mr. Barsky, or Mr. Meiji, to move to approve the minutes of the last meeting.
So moved.
Second. Made and seconded. Any all in favor?
Aye.
Aye.
I vote aye as well. The minutes are approved. The second item, which has a number of sub-items, is to ultimately approve and provide the authority for the committee to submit the audit of NIFA's financial statements, not the county's, to the NIFA directors for ultimate approval and acceptance. There are a number of materials that have been provided to the board in advance. And at this point, I believe, Carl, I will turn this over to you and our audit team from RSM to guide us through those materials prior to us taking action at item 2F.
Thank you and good afternoon. I've prepared the financial statements for the year ended December 31st, 2021, with the assistance of PKF O'Connor Davies, our outside accountants. I'll let Jen Katz, our engagement partner, take you through the financial statements in greater detail if you wish, but I'll summarize our results. The transaction on February 17, 2021 changed the authority's financial composition when we assumed $856,790,000 in Nassau County debt, along with $93,908,000 of associated costs after the county issued a declaration of need at the end of 2020. At the same time, the authority refunded $331,224,000 of authority debt, including our remaining variable rate debt, and effectively terminated our interest rate swaps. We financed the above by issuing $1,110,110,000 of sales tax secured bonds that mature through 2035. This transaction included a $197 million premium. Because of the timing, we generated a net present value savings of $117,650,000 while giving Nassau County $435 million of budgetary relief for 2021 and 2022. The result of the above is that our net position is now negative $1,343,888,000, but this will improve in future years as we use sales tax revenue to pay our outstanding debt as it comes due. Our outstanding debt was $1,148,194,000 at the end of last year. As always, any funds that the authority doesn't need to fund operations or satisfy our debts are promptly remitted to the county. I'm happy to answer any questions before asking Jen to join the presentation.
Really more of an observation before we may have questions as well. Carl, your reference to O'Connor Davies as a third-party accounting firm, for the record, they're not our auditors. And for the public who may be new to our meetings, we have for years used them to assist on a periodic and less expensive basis to help deal with certain matters that otherwise would require us to add full-time headcount. So that's been a very efficient and cost-effective way for us to access services, but they are not an auditor, they're not a second opinion, nor a source of any other attest services. Secondly, I know that RSM, when they presented their audit scope to us earlier this year, indicated that the transactions that Mr. Dreyer described regarding the major refunding led to some complexity in the audit for 2021, but we'll also note that the balance sheet is much simpler now and it will be less complex going forward. So with that, I think we can, unless anybody has any other questions for Carl, any of the other committee members or board members, I'm happy to turn it over to RSM. I hear and see none. So Jen, the floor is yours.
Great, thank you. Would you like me to turn my camera on or leave it off?
I think when you're speaking, Jeremy, they may be required to be camera on, right? Yeah.
Great. Good evening, everyone. And we did provide our presentation to you, the committee members, in advance. I can share my screen if you'd like, or I can just speak to it since I know you all have it. What's your preference?
I'm fine either way, whatever works for other members. Maybe share your screen so the public can see it if they're interested. Great.
Okay,
Thank you.
great. Let's do that.
Okay.
So I'm sharing with you the presentation of the 2021 audit results. This is a required communication that independent auditors are required to share with those charged with governance. What I want to highlight just in terms of audit status, so we are complete with our audit procedures. The only remaining items at this time would be the committee member and full board's approval of the financials and the signed management representation letter, but those are the only items outstanding, and we are prepared to issue a clean or unmodified opinion with today's date on it, pending those items.
Great. And for management, while you're on the call, any impediments you see to delivering the representation letter? That's for Carl or Evan. I think they're both muted.
No, I don't see any impediments.
Great. So good. So nothing for us to consider
Yeah,
there.
there
Thank you.
was none. The rep letter was sent back to RSM earlier today.
Oh, perfect. Okay, so it's been delivered even. Great. Excellent. Thank you.
In terms of required matters to report, so we met with you back in December to go over the plan, scope, and timing. And during that meeting, we communicated some significant risks and material misstatement. We identified 2 additional items that we hadn't communicated back then. One, as Carl mentioned, being the 2021 bond refunding. We included that as a significant risk just because it was a little bit unique in nature how it happened, and we spent a great deal of time just unwinding the accounting treatment and consulting with some of our subject matter experts in the firm. And the other one being the OPEB liability that has grown a little bit over the years, and there are a lot of actuarial estimates that go into that calculation. So we wanted to make sure we included our internal actuarial specialist and gave it the appropriate, significant risk classification. Otherwise, there was no changes to accounting policies that had already been adopted by NIFA for this year, and we didn't identify any significant accounting policies in controversial or emerging areas where there was lack of guidance. In terms of significant unusual transactions, we are required to communicate to you when those occur. You're very well aware of the 2021 bond refunding. It was considered a significant unusual transaction. It's reported as a special item in the financial statements because there was a transfer from the county to NIFA in substance of debt in order for NIFA to be able to refund that debt for the county.
Proving that not all significant unusual transactions are negative. In this case, it was a net positive to the county. So.
On the next slide, we have here significant accounting estimates. So there's 4 significant accounting estimates in your financial statements. There are 2 here, and then I'll go through 2 more on the next page. OPEB, which we already talked about. We do include our specialists, same with the net pension liability. We include our own internal actuarial specialists. In both situations, NIFA has its own external specialists, so they have help with some of the significant estimates. And then we review those estimates. We test the underlying census data that goes into those reports. And for both of these estimates, we've concluded that NIFA's balances as reported are reasonable.
Jen, when you mentioned that there was an increase,
Yep.
was that purely driven by the decrease in the applicable interest rate or the discount factor, but not due to any plan design changes or assumptions related?
Yeah, so with OPEB, it fluctuates every year, and it really depends on discount rate, investment rates of return, other factors that go into it, mortality. It's not that it was necessarily a significant change year over year, but just over the years, it has continued to change and grow. So we've just made sure we've spent enough time auditing that balance. But no one specific thing this year that caused a significant change when you look at last year. Other estimates, the fair value of investments. So we audit that by picking a sample of investments and independently pricing those using our own pricing sources. And we've concluded that the investments as reported at fair value in the financial statements are reasonable. Now, in the past, you may recall at period end, you also had fair value of interest rate swaps. The swaps were terminated in conjunction with the bond refunding. So there was no period end valuation related to the swaps. However, there was a valuation of the swaps on the date of refunding because that gets factored into some of the bonds accounting. And we did have our internal valuation specialist value those swaps as of the date of the refunding. And we concluded that the specialist NIFA used to do that had a reasonable fair value at that date in February 2021. And then gain loss on defeasance. So this year there was a gain on this bond refunding. So we did recalculate the amount that NIFA had concluded was the gain, and we concluded that their gain on refunding was reasonable. Skipping ahead, so there's two types of adjustments we're required to communicate with those charged with governance. One being audit adjustments that are proposed by us and recorded by NIFA, and then the other being uncorrected misstatements. So this might be items that we identified, we brought to the attention of management. They elected not to record an adjustment because they believed that the items were immaterial to the financials as a whole, and we agreed that they were immaterial to the financials as a whole. So in the first category here, these are the recorded audit adjustments. So this was that first category where management did make an actual audit adjustment to correct them. They both had to do with amortization on certain debt-related matters. The first one, so there was a premium associated with the Series 2021A bonds, fairly large, about 197 million. And that premium is to be amortized over the life of the new debt. We found a discrepancy in the number of months used in calculating that, I think about 3 months, a pretty small discrepancy in the number of months, but it did result in about 195,000 of additional amortization that management elected to record the adjustment for. And the other one had to do with amortization of the non-refunded portion of the Series 2015 deferred loss on refunding. So some partial principal from the 2015 issuance was refunded as part of the 2021 transaction, which means some of that related deferred loss had been refunded as well, but some still remained. And again, there was a slight formula error that management agreed to correct, and that resulted in a change of 166,000. So all in all, this was actually a pickup, an increase in the net position of about 361,000 for NIFA.
And Jen, just to be clear, and for the public who may read our financial statements, which we generally express in thousands, these adjustments are not in thousands. These are in
correct. So
dollars.
yeah,
Okay.
correct.
Relative size.
So in thousands, this would read 361. And another thing to point out, this was a one-time thing that's not expected to repeat, and there's really no significant breakdown in controls or anything that occurred. It was just an oversight, and wouldn't expect this to have any more of a pervasive impact.
It's the audit working. Got it.
In terms of uncorrected misstatements, we identified that there was about 174,000 of legal invoices for legal services incurred in 2020. The invoices didn't come in until very late 2021, and management hadn't been aware of these dollar amounts that had been incurred and not yet billed to them. So they are recorded in the 2021 financial statements, should have been expenses in 2020 instead. But at the end of the day, there's no impact on the ending net position. It's now evened out.
And again, not in thousands. I would just say that for those of us in professional services, we know that our chances of getting paid improve dramatically when we send a bill. But I think in this instance, the receipt of a bill well after the audit being done was probably something that's understandable and not a major oversight.
Agreed.
Okay, thank you.
We do also issue an opinion in accordance with government auditing standards. So there are no compliance or internal control matters that were reported in that opinion. It does state also, though, that the objective of the audit is not to issue an opinion. So I know many of you who may work in the public world, there might be an opinion on the operating effectiveness of internal controls. That's not part of the scope of a government auditing standards audit. Otherwise, no significant issues. Management was extremely cooperative, provided information very timely. Really, the audit went very well in terms of us making requests, and we were able to have open communication between our firm and NIFA. We mentioned here just consultations with other accountants, as was mentioned. PKF O'Connor Davies helps with the preparation of financial statement, and also some of the accounting treatment for the debt transaction. As you had mentioned, that's just as, almost an outsourced role rather than having it in-house. Not uncommon to see that. We had agreed with, we review the financial statements as well. We had agreed with a lot of the accounting treatment that was prepared on the debt transaction. So all of those consultations that NIFA had with PKF O'Connor Davies, we deemed those reasonable.
Just as per our scope setting meeting, you were aware, as were your team, and just for the public, that had you encountered any difficulties, situations where you didn't have access to people or information, you had redress through the audit committee members or any board member.
Yes, we always know that we can reach out to you immediately with those matters.
Okay, thank you.
Otherwise, just some market and industry updates here for reading it at your own leisure. Our COVID-19 resources, and we have an upcoming webcast for the annual governmental accounting update on June 22nd. So we provided that link should you be interested. On the horizon, so we do have a draft of the rep letter here, and I would point out to you that it really is pretty consistent with what you've seen in prior years. There was no significant changes to this rep letter here.
So the rep letter is not being used to substitute for any audit procedures you were unable to perform otherwise.
Correct.
Good.
This is just really so that management takes ownership of all of those items that are management's responsibilities, including preparation of their financial statements.
Excellent.
And one big accounting pronouncement on the horizon that will be required to be adopted going forward, GASB 87 leases. I think we've talked about this for many years now because it had been delayed with COVID. It's a little bit straightforward for NIFA. They only have their main operating lease, but it is still going to be required just to look at if there are any other leases or embedded leases and other agreements. So GASB 87 will be a change for next year's audit. So any questions?
Later this meeting, so I believe we're considering some renewal or extension of that lease with terms that may make the accounting a current year event. So,
thank you.
Any board or audit committee member questions for Jen or her team? I want to thank, if not, I would like to thank Jen, you and your team for consistent and high quality service. You've got a noteworthy level of continuity on the team, which I think is comforting to the audit committee as well as to management. And I want to commend you on your work and your findings.
Thank you. We appreciate that and appreciate the opportunity to work with the authority. And we do just have to ask two questions that are always coming from us at the end of this. One, if there are any subsequent events, and two, if there is any change in terms of knowledge of fraud or allegations of fraud impacting the authority.
I'm unaware of any of the latter. Regarding the former, the only thing that could happen would be an extension of the lease, but I can't imagine that would materially impact either disclosure or accounting.
And it would have to be signed today as well to be disclosed in the note. So I think we're okay.
Have any other members got anything they'd like to talk to the auditor about in that regard? I hear none. Thank you. Thank you, Jen.
Thank you.
I believe that brings us to item Roman 2, little f in the whole, which is the resolution at page 8 of our materials. Would a member of the audit committee care to move that resolution?
So moved.
Second.
It's been made and seconded. All in favor, please say aye.
Aye.
I vote aye as well. That resolution is passed with none opposed. We are now on to item Roman 3, which I believe is additional information and other statutory reports. And I believe Carl or Evan, this goes back to you for explanation.
Thank you, Chairman Wright. I'll take that. So, yes, item 3, NIFA is required to annually issue numerous reports pursuant to the NIFA Act, the Public Authorities Law, the Public Authorities Accountability Act of 2005, and the Public Authorities Reform Act of 2009. The 2021 annual report of the authority is one such report and was circulated to each of the directors in advance of this meeting. The report briefly discusses the structure, mission, and accomplishments of the authority through December 31st, 2021. There are also a number of attachments to the annual report that must be filed annually by us for compliance with the aforementioned laws and acts. As listed in your committee materials, these reports include the authority's report on debt issuance, our audited financial statements, a report on internal controls, a report on investments, our prompt payment report, procurement contracts guidelines, property disposition report, our mission statement and measurement report, and code of ethics. For completeness, each year we also attach NIFA's bylaws to the report. And the report and attachments are hereby submitted for your review and recommendation that they be approved by the board at its next meeting scheduled for later this evening.
Thank you. So at Roman 3, I believe we have a motion to move that forward to the full board. Would a member of the committee care to make that?
So move.
It's been made and seconded. All in favor, please say aye.
Aye.
Any opposed? I vote aye as well. Roman 3 is approved and moved to the full board for consideration. I believe Roman 4 is our investment policies. And Evan, is that back to you or Carl?
I could take that. Thank you. So in tab 4, Roman numeral 4 of the committee materials, and that's beginning on PDF page 14 of the 30 in the package, that contains the authority's investment guidelines. So these guidelines govern NIFA's investments, including the sales, monitoring, accounting, reporting, and internal controls by and of the authority. No changes are recommended in these guidelines at this time. However, they must be submitted to and approved by the board annually. Consequently, we were recommending that the investment guidelines that have been distributed be accepted by the committee today and forwarded to the board for approval at its next meeting later this evening.
And I believe that the investment guidelines have already included for some time socially responsible investing and environmental, social and governance and other considerations consistent with the state requirements.
Is that a question or?
Yeah, I believe that's true. It's up to date to the state requirements, I guess.
It is consistent with or up to date to state requirements.
Well, with that, there is a resolution at page 15 of our packages. If a member of the committee would like to move that to the full board.
So moved.
Made. Second. All in favor, please say aye.
Aye.
I vote aye as well. That motion is passed. The resolution is passed and will be moved on to the full board for consideration. Final item on the agenda is our own internal controls review, which I believe goes to Carl.
Carl, yes.
Yes, it'll be me. I'll call your attention to page 29 of 30 in the audit and internal control package. And what you have before you is a status report of NIFA's internal controls, which is to be presented each year. In it, we note the steps taken to support our system of internal controls during the prior year. As a result of the steps we took last year, we at the staff level are satisfied that our system of internal control is effective in safeguarding assets that pass through our control and in detecting any errors in a timely manner. The purpose of this report is to inform you of the status of our internal control system. No action is required on your part. Can I answer any questions?
Any questions for Mr. Dreyer or Mr. Cohen for that matter? Hearing none, thank you for that we've been informed and no action is required. Then I think our only action to take at this point is for a committee member to move to adjourn.
So moved.
Made, seconded. It's been made and seconded. All in favor, please say aye.
Aye.
I vote aye as well. The committee is adjourned. Mr. Chairman, the full board is yours.
Thank you, Chris.
Now we'll move to the Nassau County Interim Finance Authority Directors Meeting, May 31st, 2022. We'll call to order. First item is in the setting of the agenda. I don't know if Jeremy can tell us what procedurally we need to do here, but we're going to move items 14 and 16 to come in behind item 7, and the new 8 and 9, and then everything else will follow sequentially.
Chairman, I'll move that items 15 and 16 become items 7 and 8 on the agenda, and that everything else be renumbered thereafter.
Okay. No other questions? Is there a motion to approve the agenda?
Made.
Second?
Yes.
All in favor?
Aye.
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 We'll move to the first item on the agenda is the approval of the minutes of the directors meeting on March 22nd. Is
I'll move the approval of the minutes.
there a second?
Second.
All in favor?
Aye.
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 And I guess the next items relate to the audit committee we just recently had. So I guess in taking
Chairman, I'll move that we approve items 2, 3, and 4 as a block. They're carryovers from the audit committee meeting, where the full board was in attendance and was able to deliberate and have considerations during the course of the committee meeting.
So entertain a motion to approve.
I've made that motion for 2, 3, and 4
Second?
as a block.
Second. All in favor?
Aye.
Aye.
Okay, that carries. So now we can move to items. The next item on the agenda
5 and 6 is the adoption. Yeah.
is
Guidelines.
the adoption of the amended procurement contracts, guidelines, and taking of related actions.
Mr. Chairman, I'll present those. So actually, items 5, 6, and 7, I'm recommending that you consider actions 5, 6, and 7 at the same time. And these could be found beginning on PDF pages 30, 92, and 100 respectively. The items are various guidelines that must be approved by the board annually, and we are recommending that no changes be made to them at this time, except for a minor change to the Code of Ethics, which is item 7, and that is to add Deputy General Counsel title to the list of policy-making positions. But I'll briefly describe what items 5, 6, and 7 are. So item 5, the procurement contracts guidelines, they govern the authority's procurement contracts, which are agreements for the acquisition of goods and services of any kind. Item 6, they are the property disposition contract guidelines, and they govern the use, awarding, monitoring, and reporting of contracts for the disposal of property by NIFA. And item 7 is the Code of Ethics, and the Code of Ethics lists the standards and principles of conduct that applies to both the authority's employees, directors, and also former employees. So again, these guidelines, which are behind tab numbers 5, 6, and 7 of the board materials, are being submitted to the full board for approval.
Just as a related question, are we required to have another training for all members on the ethics training? And also, are we required, did we provide the board evaluation questionnaire? Are we required to be filing that in conjunction with the other reports?
The board evaluation, that's conducted once a year and is run through the governance committee. So we tend to have that meeting towards the end of each year. And then you could, to fill out that survey. So that's not on today's agenda. Jeremy, you could address the
In
code of
terms of
ethics.
the ethics training, depending upon when you started, each of you have different renewal dates. And suffice to say, I've been in touch with everyone and let them know when they have to renew, especially if their time to renew or to take the course is coming. For those members who have been on the board for a while, you're all up to date, and you only have to take the course every 3 years, so you're in good shape. The new members, though, have been informed of when they have to take it and what they have to take.
Great.
Mr. Chairman, with that in mind, I move items 5, 6, and 7 as a block.
Is there a second?
I'll second.
All in favor?
Aye.
Aye.
Any opposed? Okay, that motion carries. Next item on the agenda is the memorandum of agreement and
No, we're doing the
stipulation.
leases now.
We were
switched.
going to do the lease and the
Oh, sorry,
code of,
right,
and
that's correct,
the code
sorry.
of ethics.
Yep. Go ahead.
Donald, do you want to take your piece first?
Certainly, Jeremy. This item, which was 15 on the agenda, which I believe is now moved up to around 8, I guess, is consideration of a new sexual harassment prevention policy for the authority. LIFA's current policy prohibits sexual harassment, and staff receives annual training in this area. State law, however, requires all employers to adopt the state's model policy or establish a policy that equals or exceeds the minimum standards in the model. This proposed policy is the state model, including the complaint form, and is being recommended for approval. I'm happy to address any questions you may have.
I've read it. It seems thoughtful and appropriate. Thank you for putting it together. Mr. Chairman, I'll move that we approve the new sexual harassment prevention policy.
Is there a second?
Second.
All in favor?
Aye.
Aye.
Okay, motion carries.
So the next
Next
item,
item.
Adam, I think would be the lease.
The office space and
Yeah. I mean, basically, our office space expires in approximately a year, and I wanted to get out ahead of this and let you know that we're thinking about renewing our space, and I wanted to be able to explore our options. So the purpose of this resolution is to let you know that we're thinking about renewing our space, and we'd like to hire the same attorney we used to negotiate the lease last time to go over it with us. If by some chance we aren't able to get favorable terms with our existing landlord, we would then go out and try and find new office space at a more favorable rate. So anything that we decide, anything that we ultimately recommend in terms of office space will come back to you. This is just a heads up, basically.
And is it authorization to hire the attorney?
Well, yes, I want authorization to hire the attorney and to start looking at space, even though this is a year ahead of when our current lease expires. But as you know, if we're going to move or going to make any major changes, a year is not so much time. It takes a long time.
Not, takes time,
That's very good.
especially if you're gonna negotiate a new lease.
Right. But hopefully, I've already been in touch with our current landlord and they sent back a proposal. I'm not sure it's totally what I want, but we will now begin to negotiate in earnest with them.
Everyone has confidence in your ability to wear them down, Chairman.
Yes, thank you.
Mr. Chairman, I'll move the resolution that authorizes the retention of the attorney.
Okay, I was just gonna say that given the new legislation that was passed regarding NIFA, you might have to be looking at a 30-year lease.
Yeah, or get extension options. Yep.
But don't worry, we will be sufficiently assertive in requesting what we need.
I'd be disappointed if it didn't happen that way. I move the authorization.
There's a second. All in favor?
Aye.
Aye.
Aye. Any opposed? Motion carries.
So now, Adam, I think you're moving on to the county-related items.
Yes. So we just finished sort of the NIFA block. We'll move down to the county-related items. The next item is a memorandum of agreement and stipulation of settlement regarding longevity payments between the county and its 5 major unions, the COBA, CSEA, DAI, PBA, and SOA.
Good.
I'll discuss that one.
Let me move it for discuss. I'll make the motion that we approve it so we can discuss. I'll move the approval.
Is there a second?
Second.
Okay, so we can discuss. Go ahead.
Just, there's a lot that is known about this MOA. I just want to add on to Adam, what you just mentioned, is that the MOA was ratified by all of the unions and subsequently approved by the county legislature on April 25th. The MOA resolves the multi-year dispute between the county and the unions concerning longevity payments, which have remained frozen since a wage freeze was imposed by NIFA back in 2011. The MOA provides for retroactive payments to eligible employees covering years 2018, 19, 20, and 21. And those retroactive payments will equal 50% of the difference between what these employees would have received in those years had there not been a wage freeze in place, and the amount they actually received in those years under the freeze. The MOA also provides new longevity schedules, which are effective January 1st of 22. And those new longevity schedules provide payments to eligible employees at reduced amounts, reduced to 72.22% of the amounts that were specified in the pre-existing longevity schedules. And there are additional savings that will result from capping the longevity schedule at 32 years. And that cap is effective January 2nd, 2023. At that time, employees who surpass 32 years of service will be capped at their then accrued years of service. Taken as a whole, we estimate that the incremental costs resulting from this MOA will total approximately $103.8 million over the term of the 22 through 25 multi-year financial plan. And that amount includes $44 million in retroactive payments for the years 2018 through 21. The county legislature has approved an appropriation of $100 million to fund a dedicated reserve to cover the incremental costs through the end of the financial plan. Well, there's actually no end date, but ostensibly it will be depleted by 2025. The county can also use additional resources that it had budgeted in the multi-year plan that had already been earmarked for longevity settlements to supplement the $100 million reserve, if in fact any is needed. With that said, we are recommending that the directors approve the MOA in the context of the approved multi-year financial plan. And to that point, I want to note that in the accompanying resolution, we note that the approved financial plan was composed of specific multi-year assumptions for revenues and expenditures. For example, it included specific amounts of resources that were to be derived from various fees, fines, and specific levels of property taxes, as well as expenditures for salaries and wages based on pattern conforming labor agreements for the unsettled unions. And with respect to labor, just to kind of nail that point down, the administration has assured NIFA that the county will not abandon its stated objective of pattern bargaining that was established in recent settlements with the DAI and the SOA unions. With that, that concludes my comments and background on the MOA that's presented for your consideration, unless you have questions.
Thank the staff for putting together a thorough memo. I think it's clear and understandable. I don't have any questions.
Are there any other questions, any other members?
None here.
Not, they'll take a motion.
It's been made and seconded.
Okay, so that, let's have a vote. All in favor, say aye.
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 Any opposed? The motion carries.
I think the next item, Adam, would be the county request for bonding. So I'll take that. All right, may I proceed?
Sure.
You may, it's also, or the county contracts, those were next.
I think that Adam had requested we do the bonds first, but it's immaterial. We'll, at this point, I'll discuss the county request for bonding. the county has requested us to approve a general obligation bond issue for approximately 242 million, which with the issuance of premium bonds will come out to approximately 271 million of proceeds. You have a list of the projects. All of the projects have been approved by the legislature, and all of them have been approved as bondable by bond council. We've added a new condition, which is a condition the county may have been following anyway, which says that all the projects are to be expensed in accordance with GAAP, which is a requirement of our statute and which is something which we have requested that they do in the past.
Yeah, I would just say that, agree, Jeremy, but it would be, the projects would be, are eligible to be capitalized in accordance with GAAP
Excuse me,
rather than expensed.
capitalized would be, is a more correct term.
But
You have
yeah,
to deal with a number of accountants on this board,
Our due diligence, there were some items in there that, involved studies prior to being an actual project associated with it. Project doesn't go forward, that money would not be bondable.
right?
Things of that nature. So I think we just want to make sure that it's well understood that going forward, they can only, as we have set forth previously, that they can
Correct.
only.
I also stand corrected. It's not a specific requirement of our statute, but it is something that we have requested or we required and like the county to do.
Well, and borrowing, it's as a matter of course, right? You can't borrow for operating expenses, and if the costs end up getting flushed and not capitalized, you'll not be able to make a case for bonding. I think it should solve itself, but as the chairman noted, it's worth noting. So
Yeah, I mean, right. So one of the odd things in which we've, again, it raises another discussion item here before this approval, but the local finance law does allow you to bond for various operating expenses,
right,
which NYFA has frowned upon because of its
right,
impact on the
I
NYFA.
can say, yeah, it's not the local finance law, it's our practice.
Yes.
Right.
Right. And then with that, I think it's a good opportunity to say that the county is going to the market, and the head of the market, they've recently received a series of upgrades. They've provided some of that material to the members. Notably, S&P upgraded to AA minus, which is a significant rating. But more notably, I think in the analysis, NYFA was cited on many occasions, both in terms of governance aspect from an ESG perspective, but also in things like we just discussed by phasing out and weaning the county off of borrowing for operating expenses, and in instilling tighter budget controls, or the use of, disallowing the use of budget practices that would contribute to increasing the deficit, solidifying labor costs by the use of the pattern contract settled into, and obviously the major item, which was the restructuring of over $1 billion of debt, providing budgetary relief. All of those items were cited as significant factors in the upgrade. So both for current members and past, I think it's a good, and existing staff who are here today, it's a good compliment to all of you that we've seen some results from the work we've been doing over the last few years to move the county into this position. So I want to thank everybody for all their work in doing this, because I think it's the one measure you can look at to say that what we're doing is having a significant impact on putting the county back on a better course. So, with that, any other questions on the borrowing?
No, thank you.
I'll move the approval.
Second,
All in favor?
Aye.
Aye.
Any opposed? Okay, the motion carries. Next item is the consideration of county contract for Arcadis and Hazen joint venture. Martha?
Yes, hi. We have, you all have in front of you Arcadis and Hazen, item 32L-22. This is a contract with the Department of Public Works. The vendor was selected through an an open competitive bidding process. The county received 14 proposals and 6 vendors were awarded a contract. Out of the 6 vendors, our office has received 5 contracts and the board has approved at the last meeting on March 22nd of 22, approved 4 contracts. The term of the contract is 5 years from execution with a 2-year renewal option, and its value at $17.5 million. Funding does not include the 2-year renewal option. The vendor will provide on-call services and support the following programs for unplanned events such as Superstorm Sandy. The type of projects will be capital project management, pavement program management, grant application preparation and management, and others. Are there any questions on this item?
So these are up to the amount, but obviously only on call if there's, God forbid, or hopefully no storms, no need.
Correct. Yes,
Okay.
that is
So
correct.
it's on
yes.
call.
Any
I'll
other-
move the approval.
For a second,
Second.
all in favor?
Aye.
Aye.
Any opposed? Motion carries. Next contract is the consideration of county contract for H&O Contracting LLC. Martha?
This is also a contract with the Department of Public Works. The vendor was selected through an open competitive bidding process. 5 bids were received, and the contract was awarded to H&L Contracting LLC since it had the lowest bid. This is a contract to resurface over 50 lane miles of county roads in Albertson, the city of Glencoe, Hicksville, Millneck, Oldsberry, Glencoe, Garden City, and the hamlet of Uniondale and Latintown. The term of the contract is 180 days from the notice to proceed and is valued at $8,251,761. The county will seek reimbursement after the project is completed. Otherwise, the contract will be funded with capital proceeds. Approval of this contract does not guarantee approval of future borrowings. Are there any questions?
Questions?
Good to hear my roads are gonna get fixed.
Yeah.
Two.
Realistic, personal, right?
I was gonna ask,
Yeah.
why wasn't Manhasset in there?
Yeah.
Where I live.
You're in a village. You're probably in a village, right?
No, I don't think so.
I'm good with Old Westbury and I'll move for approval.
Sylvia, you should second this since it's your town.
I second for Garden City, second.
All in favor?
Aye.
Aye.
Any opposed? Motion carries. Next item, consideration county contract for J. Anthony Enterprises, Inc.
Sure. J. Anthony Enterprises, item 33L-22, also a contract with the Department of Public Works. The vendor was selected through an open competitive bidding process. 5 bids were received, and J. Anthony Enterprises was chosen as the lowest acceptable bidder. The term of the contract is 18 months from the notice to proceed, and its value at $9,749,497 with 66 cents. $6.5 million will be covered with state aid funds. The county share is $3,249,497 with 66 cents, which will be funded with capital proceeds. Approval of this contract does not guarantee approval of future borrowings. The contract is for construction services to increase flood resiliency and provide pedestrian and motorist safety along Beach Street from Yates Street up to the border of Long Beach. Are there any questions on this item?
Anybody from Long Beach need to weigh in? I'll move the approval, Mr. Chair.
I'll second it.
All in favor?
Aye.
Aye.
Any opposed? Motion carries. Next item is consideration of county contract for Basilico Civil, Inc.
Basilico Civil Inc. 021-22. also a contract with the Department of Public Works. The vendor was selected through an open competitive bidding process. 4 bids were received and the contract was awarded to Basilico Civil, Inc., since they had the lowest bid. The term of the contract is 180 days from the notice to proceed and is valued at $9,435,061. The county will seek reimbursement after project is completed. Otherwise, contract will be funded with capital proceeds. Approval of this contract does not guarantee approval of future borrowings. This is a contract to resurface over 50 lane miles of county roads in the towns of Hempstead and North Hempstead. Any questions?
I'll move that.
Any takers?
Hopefully that's Hempstead Turnpike. I'll move that.
Second,
Yes.
all in favor?
Aye.
Aye.
Any opposed? Okay, motion carries. I think we are trying to stick to our time frame. I don't see.
Is there one more? Or are we
Yeah,
down
we
to
have Pratt Brothers.
Norristown County contract for Pratt Brothers.
and that's it?
Get this done, we're done.
Yes.
Martha?
Pratt Brothers. Item 022-22, also a contract with the Department of Public Works. The vendor was selected through an open competitive bidding process. 5 bids were received, and the contract was awarded to Pratt Brothers since it had the lowest bid. The term of the contract is 180 days from the notice to proceed and is valued at $7,992,465.65. The county will seek reimbursement after the project is completed. Otherwise, the contract will be funded with capital proceeds. Approval of this contract does not guarantee approval of future borrowings. This is a contract to resurface over 50 lane miles of county roads in the town of Hempstead. Are there any questions?
Interesting.
All about which 50, right? I'll move
The Hempstead,
you're familiar with the town, right? So
a little bit.
I'll move it through.
Is a motion?
Made.
Is there a second?
Yes, second.
All in favor?
Aye.
Aye.
Opposed? Okay, I think we got in under the wire here. Any other business? If none, entertain a motion for adjournment.
So moved. Sorry for the cough, guys.
That's right. Feel better. Second.
All in favor, assume we adjourn. All right, well, thanks, everybody. Appreciate it.
Thanks, Adam. Thanks, guys.
Thank you.